What is a mutual fund? So what do we know about mutual funds?
Disclaimer: mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You've heard this disclaimer before. It's freaked you out, and that's probably all you associate with mutual funds, right? But that's far from really understanding mutual funds and its benefits.
A mutual fund is a professionally managed collective investment vehicle that pools money from many investors to buy securities. It's more like an avenue that lets you diversify your investments across different asset classes and within an asset class. And investors don't have to break their heads over it all on their own, because mutual funds offer the big benefit of professional money management expertise. Get it?
Okay, let's explain this with a simple example. To get from point A to point B, you have two options. You can ride your own bike, or you could take public transport like a bus. If you took the first option, you get full control, deciding your own travel times, start and end points, routes, speed, etc. But all that flexibility comes with two conditions. You have to know how to ride the bike, and you have to actually focus on riding it. On the other hand, if you took a bus, you may not be able to choose the exact route, but you'd still have the flexibility to read your newspaper on the way without worrying about the drive itself. Moreover, it's cheaper on your pocket.
Think of a mutual fund scheme as somewhat like the bus. It's a collective investment vehicle that has a clearly stated investment objective.
Like getting from point A to point B.
And is managed by professional fund managers at nominal cost. And an investor could invest in the scheme if its objective is in line with his personal needs. By investing in the mutual fund scheme, the investor has outsourced the job of managing his money. The fund manager would then invest the money in line with the stated objective, do the research to select the underlying instruments, build a portfolio, keep track of those investments, make changes when required, and so on.
Obviously, all these services come at a cost. Like riding your own bike can be more expensive and kind of like investing directly in financial markets. However, investing in a mutual fund is like taking a bus, where travel costs are divided. In a mutual fund scheme, these costs are divided amongst investors based on the amount they have invested.
Mutual funds also offer investors more flexibility, letting them decide when to start investing and, in most cases, when to withdraw their investments. This makes mutual funds an ideal investment vehicle to plan for one's financial goals. Once an investor knows his financial goals and needs, the amount and the time horizon, he can easily go ahead and select schemes that can help fulfill his objective.
Disclaimer: mutual funds are not as complicated as you feel. And now that you have understood how a mutual fund works, it's in your advantage to invest and reap the benefits they offer. So don't let disclaimers about mutual funds freak you out anymore.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.